Hey, my fellow property managers, Mark Cunningham with Grace Management. I thought we'd talk about something a little bit different in this video, not directly property management related, but real estate related. And let me offer you a few of my personal thoughts on, is it still a good time to buy real estate? Now, I know real estate markets are different. They're all local. You can go in a million different directions and pull out data to prove whatever point you're trying to make. So I'm not saying I'm right or wrong, but this is just my take as someone who's been in this industry for a long time. And let me just start off by saying, as a baseline, I love real estate. I bought my first investment property when I was 23 years old, almost 30 years ago. I still own investment real estate today. I've bought a lot of properties, sold some properties. We've helped real estate investors buy a lot. I love real estate. So that's where I'm coming from with this question. But I still want to analyze this question to determine what's the wise thing to do. We don't want to let our passion override our discipline. So to do this, here's what we're going to do. We're going to look at kind of four different categories, four questions to answer to determine the answer to this big question. So the four small questions are, what do you pay? Are you paying a lot? Are you getting it? Is it on sale right now? How much money is it bringing into you? What's it costing you in expense to hold? And what does the future outlook look like? So what do you pay today? Well, here's what we know. We know that home prices are at historic highs, not just in dollar amounts, but also in the valuation of how many times annual income it takes to purchase. So this is a stat off of, I'll put a link to in there. I think this is called the Visual Capitalist. And what this is telling us is, if we go way back to 1985, the average price on a home in 1985 was $78,000, and it would cost the average American 3.5 times their average income to buy that home. The average American made $22,400. Average price was 78. That's 3.5 times. And you can see over time, this bottom line here is the increase in people's income. So the median income from 1985 has gone from 22,000 to almost 75,000. So today, people are making an average of $75,000. That's increased. Here is what has happened, though, to the price to income ratio since 1985. It's gone up, it's spiked. Remember the 2000s? It got crazy, and then it came back down. That was a spike. Well, here's what's interesting. Look what's happened really since 2010. We have gone up and to the right. That is not normal historically. We are currently, the average American has to pay almost 6 times, 5.8 times their average annual income to afford a house. So the affordability question is answered. Homes are not affordable as it relates to the average price per income. In addition, we know that interest rates are not really helping with this. I know you probably can't even see this graph, but this is interest rates going all the way back to 1980. From 1980 to 2020, interest rates went one direction, down and to the right. So much so that interest rates in 1980, the average, or the peak of interest rates in 1982, I think it was 19%. They went all the way down to about 3%, I'm rounding here. That's an 84% decrease in the interest rate over 40 years. An 84% decrease. Now, what has happened to home prices during that same period of time? They've gone up, and a lot of people would argue that there's a correspondence between home values increasing and interest rates decreasing, that those things are tied together. Now, what's happened since 2020? Well, interest rates have gone back up. They've turned around. They went from 3% to about 7%, which is where they're at right now. That's a 133% increase in the interest rate, going from 3 to 7. That's a big increase as it relates to what's important, which is the percentage of the increase. Now, you may say, well, Mark, historically, it's still a good deal. Okay, I don't care. That should be your answer to that. Who cares historically if it's a good deal or not? Because we've had 40 years of declining interest rates. If you look at historically over time, going way back when, interest rates are still low, yes, but prices are high. So my interpretation of this is we're paying a lot right now. If you buy a house, it is not on sale. You're not getting deals on properties like we could in the past. So I think that's a negative. Well, what about the income? But Mark, if I may pay a lot, but I'm making a lot of money, right? Aren't we making a lot of money as landlords, as real estate investors? Well, let's look at a couple of things here. Here's what we know. Rental rates in most markets, and please, I understand every market is a little different. I'm looking at the overall market as a whole. Rental rates are flat overall. They're declining in some markets, and let's not forget, they're also being capped. So even if you could potentially charge more, if you live in the wonderful state of California, for example, you're capped on how much rent can go up. So your income has a ceiling now. You can't just, the value of the home has gone way up, but the people complain about rents going up, but the rents aren't going up as fast as the value is and as fast as the expenses are. We know that. And number two, not just rental rates, but other rental fees are being greatly restricted. So historically in the industry, you'd say, well, gosh, I can charge a pet rent. Well, in a lot of states, you can't now. Pet rent is illegal in many states. Well, I can charge a lease admin fee. Well, in a lot of states, you can't. So the opportunity for you as a landlord to capitalize on other income streams, especially in the multifamily world, are being pushed down, down, down. So I can say with confidence, the income lens that we look through is not a positive one. There's not a lot of opportunities to make more and more money on the top line. Well, what about the bottom line? Mark, I understand that's just the total income, but the expenses we're paying to maintain these, that's certainly going down, isn't it? Well, no, it's not. We know, and if you're a property manager, you know that the holding costs are going up faster than the rental rates are going up. Here's just a few potential common categories of expenses that your owner clients face or that you face as an investor. Your mortgage payment, that's up if you're just buying now because of the interest rate. Property taxes, wow. Property taxes, depending on what market you're in, are increasing extremely rapidly. HOA dues and payments are going up. I can't get averages on those, but I did find the average in America. The average insurance increase year over year is 40%, 40. That's pretty wild. Maintenance, this was just in a Wall Street Journal article released the day before yesterday, talking about the costs of home ownership and how the costs of home ownership are at an all-time high. It's going higher, higher, higher. They're not relating it to investors, but it's very, very true for investors, because as an investor, you still have all the costs associated with home ownership, and you have some more costs as well, costs of doing business with your tenancy as well. But this article said that maintenance year over year is up about 8.3% due to inflation. And they said this, the average American, I don't know if this is true or not, but this is what they said, spends $6,663 per year on maintenance. That's just general maintenance on a property. It seems a little bit high to me, but that's what they said. And of course, turnovers and utilities. When your property turns over, you have no income on the front end for a period of time, and your expenses skyrocket. So we can say with a lot of certainty that the expenses are not in a positive place to consider for you as a real estate investor. That's not enticing you. What you pay isn't enticing you. Income isn't enticing you. The expenses are certainly not enticing you. Well, what about the future outlook? Before I share about the future outlook, I want to thank the sponsor for this video, PMW, which is Property Manager Websites. We're in the PM business. You need to attract real estate investors. You need to attract them. You need to market to them. The best way we know how to do that is through our website, Property Manager Websites. We are a big fan. We use them. If you need a refresh on your website, reach out to my friends at PMW. Ask them for a demo. They have different packages. You can just get a basic cookie cutter website if you want. You can do some customization. You can go all the way customized. They've got different marketing packages you can layer on. So they can give you whatever you need, because you've got to be findable online. If you're not findable online to investors, by the way, and to absentee and accidental landlords, your business is going to suffer. All right, so last, what about the future outlook? Well, if we pull back a little bit and look at big picture things happening, here's what I know is happening. Legislation and compliance are making it more and more difficult to be in this business, to be a landlord, because more and more legislation is coming down, and it's not pro-landlord legislation. They label it pro-tenant. I would say it's actually anti-landlord in a lot of cases, this legislation. And the compliance that is being layered on top of this makes it riskier for you to own real estate, makes it more difficult for you to manage real estate. And we always have to remember that people with money have options beyond investing in real estate. T-bills are up over 5%. That is risk-free investing. Money goes where it is treated best. And in my opinion, money is not being treated very well right now in investing in real estate. So I have to give that one, in my humble opinion, I got to mark that one red too. I don't believe it's a very compelling case right now to be buying investment real estate. Now, hold on just a second. You're like, well, Mark, it's really depressing, because we're in the business of managing real estate for other people. And you're like, why would you say this? You're telling your own clients, like, don't buy more real estate. Well, we are obligated to give our clients the truth and to tell them what we believe is happening in the market. That's just, we're going to be candid. We always have been. And so we're going to do that with our clients. So we're not screaming that the sky is falling. We're not telling everyone to go sell their real estate. But here's what we are telling them. And this is what you need to tell your owner clients as well. Be cautious and wise on the types of properties you are buying right now. So if you're an investor, it has never been more important, if you're going to invest in real estate, to buy the right property in the right location and place the correct tenant and manage it wisely. Gone are the days of buying any property in any location, putting in any tenant, and appreciation just takes it to the roof and rents come in and all this is just great. Those days are behind us, my friends, and I don't think they're coming back. So the opportunity for you as a professional property manager are great right now because people are still going to invest in real estate. As long as people are investing in real estate in California, they're going to do it anywhere. So when they're doing it in your market, you need to be the expert. You need to help them getting the best price for what they pay, maximizing their income, minimizing their expenses, and helping them to navigate the compliance issues that we go into. But this is the last thought I would leave you with. As you're considering investment, don't ever let your passion override your discipline. You've got to be disciplined in this game, otherwise you're going to wind up in trouble. Now that's just our opinion. We could be exactly wrong on all this, but after tracking the market for decades, really, that's our take on this. Hey, have you joined our new Facebook group yet? If you're a Facebook person, jump on Facebook, search for pmbuild.com. It's a private group. You've got to answer a few questions. I will personally let you into that group, and I put content like this and other things on there. Otherwise, check out our podcast, check out our website, pmbuild.com. And by the way, we just opened registration for our next Visit Grace event taking place in August. A lot of things going on the website. Jump on there. We're happy to be a resource if we can. My friends, until next time, and as always, I wish you success.